Hello dear founder! You have definitely seen the incredible stats, like 500% ROI in 3 months, saving 10x in the first month or something like that. And let's be honest, who wouldn't want such results for their business? If we know that those numbers are only marketing figures meant to entice us into paying for subscriptions or services, we still wonder, what if? In this video we will break down what ROI really means when it comes to software, how those online numbers can be misleading, and how to figure out what your really ROI might look like. So if you're ready, let's go.
Are you ready?
I'm ready.
A quick recap. What is ROI? It stands for return of investments. The classic formula is gain from investments minus cost of investments plus cost of investment. All of that is percent. The trick is, return isn't always money. It could be time saved, risk avoided, or happier customers. Of course, all those things can and should bring you more money. A happier customer will return or refer you to their friends, and avoided risk will let you keep money you wouldn't otherwise spend on mitigating it, and so on. But then you should have some realistic ways to count your gains from every project, every piece of software you implement. For example, if your new software saves your sales team 200 hours a month, you can simply take the average hour rate of your team member, multiply by 200, and you will have a part of that return that should be included in your ROI calculations. But you have to be ready for the fact that not everything can be easily expressed in monetary terms. So that brings us to the second point. Is ROI for implementing the exact same tool to the same for two different companies? Obviously, the answer is no.
No! No!
Even if the companies are similar in size, operate in the same industry and have the same business model, in general, the ROI they achieved from adopting the exact same CRM, for example, will be different. Why? Because it's not only about software itself, but about how you use it. Imagine two marketing agencies, both 20 employees, give or take starting to use, let's say, Zoho CRM. But agency A integrates the CRM with email, automates follow-ups, ensure timely data entry. Agency B, at the same time, just uploads a contact list and uses CRM to track the interactions to make work easier for sales specialists. It's pretty clear whose ROI would be higher. That brings us to a simple conclusion. When a software company says our users see a 300% ROI, take that as a story, not as a guarantee. Now let's talk about the elephant in the room.
Francine.
The internet is full of ROI claims that sounds amazing but don't hold up. ROI numbers often come from selective case studies, best case scenarios, or intern testing. No one is lying to you. It's just that they are not telling you the full truth either.
Just tell me the truth.
But you won't have the urge to buy a subscription if you see something like 3 of our 22 clients reported a 250% ROI in 2 months. And selling is the main objective when companies create impressive stats materials. So when you see those claims, you might want to ask first, who collected this data? How was ROI calculated? Does this match my business model or scale? Most companies won't answer those questions. Obviously, but just asking them for yourself might help you keep your sanity with you when you see another marketing effort directed at you. Now let's talk about something more pleasant and practical, how to evaluate ROI for yourself. I will share a simple framework for you. First, define your goal, what outcome matters. It could be anything. Time saved, leads gained, revenue. Of course, we sometimes gain something entirely unexpected, in a positive way, for any kind of innovation. You should account for it, but never put it before the primary objectives. Second, track your inputs. This includes subscription cost, onboarding time, training hours, everything you can think of. Of course, if you only account for the most obvious cost, software itself, your ROI will go sky high without even having to get inventive. Third, track your outputs. You need only tangible results, more clients, faster delivery, fewer errors. You will also have to find ways to express them in monetary value to count the real ROI. For example, with fewer errors, you will have to ask how many is fewer and count with the average cost of any error, and so on. Fourth, review over time. ROI isn't fixed, it improves as your team adapts. The first week or two rarely means anything, but if you are seeing no real improvements in 2 weeks, something is wrong. That's what demos and trial periods are for.
Pretty smart, dude.
Let's make this practical with a simple example. Imagine a mid-sized company, let's call it Breeze Pass Consulting, that's thinking about adopting a new project management software. Their target is to save about 20% of each project manager's time per week. They have 5 project managers, each earning $50 per hour, fully loaded cost including benefits, and working 40 hours per week. So total management labor cost 5x40x50 equal to $10,000 per week. Software cost will include subscription $500 per month, $6,000 per year, implementation and training, $3,000 one-time setup. So total first year cost $9,000. We'll assume the ongoing cost after year 1 drops to $6,000 since setup is done. After implementing the new software, Bring Pass measures the results over a 6-month period. Each project manager now saves 6 hours per week of admin work. So total time saved per week equal to 6 hours x 5 managers, it's 30 hours per week. At $50 per hour rate, that's $1,500 per week. Over a full year, 50 working weeks, 1.5 thousand x 50 equal to $75,000 in labor value saved. They also notice a 10% improvement in on-time project delivery, which helps them retain an extra 1 client contact per quarter, worth $5,000 each, adding $20,000 in retained revenue annually. Total measurable gain $75,000 time savings plus $20,000 extra revenue, equal to $95,000. Now we put in numbers. ROI equal to $95,000 minus 9,000 divided by 9,000 and x 100% equal to 955%. If the situation steadily remains as good or improves, these particular investments will turn out well for Bring Pass Consulting. So let's sum up. ROI is powerful, but only when you define it. The next time you see a 500% ROI headline, you will know exactly what questions to ask. And you know that it doesn't only depend on the vendor, but also on you and how you go about implementing the software you choose.
But choose carefully.
So ROI is about feed, but it's also about your efforts. So what is your experience with ROI? Share your stories in the comments. And if you found this helpful, give it a thumbs up and subscribe for more tech, tools and productive tips. Also remember, if you want to develop something, we will be happy to assist you. Thanks for watching, it was your trustable Chief Executive Officer, we'll see you.